All right, Canadian Wealth Secret Seekers. Today, I am excited to bring to you an awesome, wonderful Canadian Wealth Secret Seeker himself. His name is Luis Limgenco, and he is from the GTA, but wasn't always from the GTA. But before, I don't want to give too much of it away. I want to flip it to you, my friend. Tell us a little bit more about yourself there, Luis, and where are you coming to us from, and how are things going in your world today?
First of all, Kyle, thank you so much for taking the time to ask me to join this podcast. Great opportunity, what an honor, and yeah, happy to be here. And to answer your question, very quickly, I am an immigrant from the Philippines. I came here to this wonderful country back in 2001. Came here right after we got married. They had lots of hair back then, back in 2001, and yeah, so we came here with I think we had around $12,000 in our pockets, and no jobs. All we had were our degrees and vision of hope of freedom and economic prosperity in the land of Canada. So I came here 2001, started working in the finance industry. I was a financial analyst in one of the big telecoms in Canada. And my working hours there were horrible, right? So I was working 60-hour work weeks for almost 2 years. And I said, you know what, this is not the life I dreamed of. So I started thinking of how do I gain financial freedom back then. And luckily, as a finance guy, I love spreadsheets. I love numbers. I came across the world of real estate, and to me, I started modeling what it would take to invest in a condo back then. Back then, you can get a condo for $100,000 in Scarborough or in the outskirts. And
everyone listening today is like, what are you talking about?
Yes,
but that was probably still a big number, right, back then.
Yes, but much more affordable to what it is now. And back then, you can actually have something like cash flow in the GTA, right?
That's been something that's been a mystery for quite some time now in the GTA, has it not?
Yeah, because I remember the numbers, right? I remember the numbers again. 2002, three, right? $100,000 condo, you could rent it for $1,000 a month. So that beats the 1% rule in real estate. And back then, the interest rates were around 2-3%. So I would easily cash flow even if I pay the condo dues, right? So that was what intrigued me. And again, being a finance guy, I did all these Excel spreadsheets, and I thought, okay, this is my path to freedom, right? So that's where I decided, you know what, I'm gonna save like crazy. I'd rather spend my financial analyst salary aggressively, right? And try to aggressively invest in real estate. So that's how my journey started, and I slowly built my portfolio. I can go on and on, Kyle, but I know we have a time limit. But in a nutshell, that was when I started buying real estate.
I love it. I want, and I know sometimes it's nice to kind of hold back, but I almost want to like fast forward for a second, and then we'll fill in some gaps here. But I want to fast forward because you're talking about getting started. I know that there's people that listen to this podcast. Some invest in other asset classes, some invest in real estate, some are at various spots in the journey. Some are business owners that are successful business owners, but they haven't really figured out, what they want to do. I know you and I hit it off very well because you're a numbers guy. I'm a numbers guy. Spreadsheets, I dream about them, in a positive way. It's not nightmares. It's actually like, these are like the best dreams I have are about numbers and spreadsheets. So
100%.
Yeah, so we definitely align there. So you came in, you had basically $1,000 in your pocket. You got started. You got, obviously you had some education to back you up because, you landed in what I'm going to argue is a good quote unquote career, but just not a great lifestyle career. And then all of a sudden you recognize that, real estate was going to be this path. I love it. Fast forward to today. What does your portfolio look like and sound like? And we can unpack what that, what's consisting in that portfolio, but how big is it? And from my understanding, I think that you actually did this pretty much through self-funding for the vast majority of it. So it's not like you were just putting, no money down deals or JV deals where you have all these doors, but you never, you own parts of these doors. Tell us what's going on in your portfolio now.
Correct. So just to summarize, today I have around 18 properties in North America. If memory serves me right, I have 6 detached homes in Las Vegas, Nevada. I have 3 triplexes in Calgary, and I have 8 rental properties in New Brunswick, plus my primary residence in Toronto. So that's a total of around 18 as of today.
I love it. I love it. That is fantastic. So first of all, I want to congratulate you because that is a massive accomplishment. Something that I'm sure is intriguing people is this idea that you didn't necessarily stick to the GTA for these properties, and that actually, when we actually run through your portfolio here, you don't have any rental properties in the GTA. So I'm guessing that you've got management in place and that you've done some of that legwork. Tell us a little bit more about where did you start the investment journey, and why in that particular part of North America?
Perfect. So when I started my journey, my first rental property, again, I came here 2001. I saved aggressively, right? I saved aggressively, meaning I did my shopping in places like Value Village, Goodwill. I went to garage sales, and again, my goal was I wanted out of this rat race, and I knew that real estate was the path for me to take me to financial freedom. So I actually started my real estate journey in the GTA, right? So I bought a couple of rental properties starting in 2005, in Scarborough and in North York, right? And I chose these properties because they were cash flowing. I chose a bungalow in Scarborough and the townhouse in North York. The reason why I did not go the condo route was because, again, the cash flow was limited, right? I didn't want to pay condo dues, and I didn't have room to divide rooms or units into separate living quarters, right? So that's why I chose this Scarborough property and North York property. But then again, properties in the GTA were going up to the point where the cash flow did not make sense anymore. And then at that time, the US property market crashed, right? The US property market crashed. I think this was during the time of Lehman Brothers in 2008 or 9. And I thought there's an opportunity here, right? So as I monitored the market, right, I looked at my spreadsheets, and lo and behold, I saw Las Vegas, where properties that used to be $500,000 dropped to around 150, 180K, right? And at that time, if you would Google it, the Canadian dollar actually was worth more than the US dollar.
Yes.
So I thought this was a perfect storm wherein, oh my gosh, this is a once in a lifetime opportunity wherein I can easily buy, right, a detached home in a nice area of Vegas called Summerlin, $500,000 pre to 2008. Now it's down to 150, 180. I went all in. Meaning I sold my 2 rental properties in the GTA. I borrowed everything that I could. I refinanced my house. I wanted to collateralize my RRSP and RESP, but my wife said, "You're not touching our RRSP and RESP." But I wanted to go all in. So that was how I went all in. I talked to banks in the US. Unfortunately, during that time, 2011, very, very few lenders were willing to lend to non-US residents.
Sure. And I mean, even to many US residents, right? Because I mean, they had really, the mortgage crisis was definitely affiliated with that big crash.
Correct. So what financed my investments in Vegas were mostly the proceeds of the sale of my 2 rental properties in the GTA, plus the refi in of my primary home. Okay. And during that journey, I think within the first 12 months, talking to people in the US and to Canada and to my network, I heard that RBC US, back then it was only RBC US, had a program for Canadians not living in the US, and it wasn't even a mortgage; it was more of a HELOC.
Right.
So I had a couple of properties already acquired back then, and they said, you know what, we can put HELOCs on these two, and that's how I got more financing.
I
And
love it.
during the course of the year, I just tried to acquire more and more, and that's how I accumulated 6. And again, similar strategy, wherein it came to a point wherein the Vegas market was just appreciating too much. And that's when I stopped on the brakes, wherein the cash flow was not making sense anymore, simply because the property values have increased significantly.
Got it.
And that's how I pivoted to Calgary and then to New Brunswick.
I love it. I love it. You and I are very similar. That was what drew my attention. I had looked in Vegas for quite some time. Now, mind you, this was a couple years after you started the journey. I was started probably around 2010, finally pulled the trigger 2011. And I actually picked up a property in Florida, not because it was the best numbers, but because emotionally I struggled with the idea that I'm like, what if rentals don't work? I'm like, I would be okay with having a Florida property, you know? So that was sort of my, you know, that fear driving my decision there. But I was looking in Vegas for a while. We ended up picking up a property in Arizona, but having, you know, I've talked about my primal question on this show a number of times before. My primal question is, am I financially secure? So I was unable to go the full all in like you did. And wow, what a regret that I had years later.
Kyle, I'm smiling because what drew me to the US was not Vegas. It was actually Florida. Because I dreamed of, you know what, I being new to Canada, the word cottage was alien to me, right?
Yeah.
Back where I came from, when you say cottage, it's like a small hut, and that's where people who are marginalized live, right?
Mm.
And so cottage to me was like, okay, that's a Canadian concept. Wouldn't it be nice if I had a cottage in Florida? So I started looking at Florida as well, just like you. What drove me to Vegas was when I was chatting about, you know, properties in the U.S. through my network, through my relatives. I heard that one of my aunts was actually a realtor in Vegas, and I didn't know that. So that's what drew me to Vegas. And again, given that I had a trusted realtor back then, and yeah, that's what made me pivot from Florida to Vegas.
100%. And on it, I can relate on so many levels, not only because we were both kind of looking down there and maybe looking for similar reasons in certain areas, right? Going, hey, cottage, vacation home, whatever, as sort of the fallback strategy. My goal was investment, but at the end of the day, there was this idea like, what if I can't rent it? That's what every new real estate investor asks themselves, right? And for me, the big reason why I end up picking the location where I ended up in Florida, I was looking in a number of different places, but I'm telling you, there was a realtor. His name's Brett Kroom, and he's still someone that we keep in touch with. He took me and Chantal, my wife, under his wing, and he was just amazing, just an amazing person, but just someone who we built trust, and he built trust, and ultimately we trusted his guidance, his advice, his recommendations. And it sounds like you had that same thing as well. So sort of a bit of a Canadian wealth secret sauce right now that I want to make sure people recognize is it's all about not only your team, but also if you are looking outside of your area, not only, I mean, in your area, you still need to have someone you can trust, but finding that person in that place that's going to take care of you. It's not just a look in the yellow pages, or I don't even know if yellow pages exist anymore, going to Google, picking the first person out of Google. Like, you really do need to make sure that you find that person, because when push comes to shove, when the deal lands in your lap and you're about to make that final choice, right? It's that person that you're going to be looking to help you with, you know, sort of that final decision. If you don't have that trusted individual, you may pass on an opportunity that probably should have been an all-in opportunity.
100%, Kyle, and I want to echo that, right? And again, being a spreadsheet guy, I knew that numbers and finding the right property was only step one, right? That's one of the maybe 2 or 3 pillars that you need in order to be successful when doing investments outside of your province, outside of your town, or even outside of your country. And you said it right there. Next to numbers and finding the right property, it's finding the right people, right? And you need to find somebody you can trust, someone who has full integrity. I value integrity over competence, right? 100, if you can find the most competent and most honest person, perfect. But if I have to choose between competence and honesty, I would go with honesty, because competency, I can coach that. I can teach someone how to become more competent, but honesty is not something I cannot teach. I would have to rely on that person. That person is my eyes and ears. And without honesty, the probability of failure is very, very high for an investor, right? So
you know, you remind me of, you know, there's the triangle of time, skill, cost. And usually they're battling, right? It's usually you can kind of find two, but it's really hard to find all three, right? So it's like, if I want, you know, best skill, best timing, then it's going to cost you. If you want low cost and skill, it's probably going to take a lot longer, and vice versa. And I picture a similar triangle in what you're suggesting there, where, you know, that honesty, integrity, and then there's competence, and then there might be, maybe it's time or price or something where you know you're going to have to sacrifice. And I'm with you on that. I want somebody who I'm going to want them to at least make sure there's enough time in their day to deal with me, but then also that integrity, that honesty, that piece, because those types of individuals are going to be the type that go, listen, this is a little bit outside my wheelhouse. I'm going to bring in this person and they're going to help us along and so forth. Right. So bang on. Now I want to, you know, continue along this journey, and you did very well in the Nevada market. I'm guessing prices, as you mentioned, started to increase, and then you started to look in other areas, and you found yourself out west in, I believe it was Alberta, Calgary,
yes,
and in New Brunswick. Now, you've got, we don't necessarily need to talk about both markets in particular, but now that you're looking at it, I'm curious, because you've continued to grow. I'm guessing that you're going to continue crunching numbers, underwriting deals, seeing what makes sense for you. What is it, would you say now, knowing what you know, because clearly you're looking for numbers that make sense. You're looking for people you can trust, right? So I'm guessing you've got people in Calgary, people in New Brunswick that you can trust. But I'm wondering, what is it now that you're actually, now that you have these properties, you have a portfolio, there's no, we'll say probably no urgency for you to necessarily pick up the next property. What would you say is sort of like your buy box, like your sweet spot for finding, say, the next deal that might land in your lap?
Okay. So Kyle, as you were talking, two thoughts came to mind, because I think I think subtly you were asking why, like, from my journey from Vegas to Calgary to New Brunswick. I want to tell the audience, why did I choose Vegas? So I mentioned it was my aunt, but actually the bigger reason, like, why Vegas, why Calgary, why New Brunswick? Being a numbers guy, I track house price indices. In the US, they have this thing called the Case-Shiller price index, house price index. And it's a bunch of numbers which tell you all the major cities in the US. It tracks house prices like the stock market, right? So that's where I saw Florida and Las Vegas having the biggest decline from 2008 down to 2011. So I thought, you know, simple real estate, simple any asset class, you buy low, sell high. So that's what drove me to Florida and then to Vegas, right? Now, Calgary, same thing. In Canada, we have this thing called the Terranet House Price Index. Again, being a numbers guy, I looked at the charts and the graph, and I saw that Calgary, unlike Toronto, actually declined until 2016, right? I thought, okay, this is a good opportunity. If I can just buy at the dips, my probability of failure is very low. So that's where I went, right? And again, similar. Before I went to New Brunswick, Calgary was a new play because I didn't know anybody in Calgary, right? I didn't have my aunt there, no relatives, so I had to basically find the right person. And back then there were no Zoom calls. This is like back in 2018. No Zoom, no video calls. Everything mostly was done through the
only
telephone.
Telegram.
Correct. So I would talk to people. I would email them and I would evaluate them on how they respond to my emails and how they communicate. I could more or less, and then I would ask around, who is this person? Is he honest? Is he competent, right? And again, that's how I pivoted from Vegas, and that's how I chose Calgary in all the cities of Canada back then. Now Calgary, just like Vegas, started going up, and again, I was after cash flow now, right? And my goal was, given my portfolio back then, it was grown big enough wherein I could actually consider retiring from my corporate job. I was now looking for cash flow, and that's how New Brunswick came into play, right? And because I knew that the cash flow in New Brunswick was much higher in Alberta, right? So that's how I chose New Brunswick. Now, to answer your question, finally, what are the parameters, right? So one parameter is basically looking at geography, wherein I try to look at the house price indices and see where the market stands historically, right? I mentioned how I chose Vegas and Calgary, wherein I saw that it was a historical dip. That's how I chose Vegas. That's how I chose Calgary. New Brunswick is a different story because New Brunswick, I started doing investing in New Brunswick last year. However, I was already studying that market since 2022, 2 years ago. I wanted to invest in New Brunswick even if the prices had not dipped, simply because of cash flow, right? Right. That's what drove me, and I knew that given what was happening at the macro level, I knew that the risk was manageable, even if the prices were not at the dip, even if the prices were just maintaining from where it was back in 2020, right? It was relatively flat. I knew that cash flow was going to grow given what was happening in the market, new college students from international market, new hospital workers from the international market. I talked to the people in New Brunswick. I even talked to the mayor. They're now my Facebook friends, and I know that the city is growing. The cities where I'm investing, it is growing, and that's where I'm focusing right now. And my parameters are still the same, making sure that the cash flow works, making sure that I have different sources of revenue for the different sectors in the city that I'm investing in.
I love it. I love it. That paints a really clear picture. And, what I hear from you is very similar to the journey that myself and my partners have been on as we built our portfolio. And I always like to say, I'll hop on calls with some, aspiring real estate investors. You'll have some people that maybe they've been investing in, say, traditional asset classes, maybe just the index funds, or they, whatever that might be, and they want to get into the real estate market. But what I often mention is that, when you're getting into the real estate market, it's a lot easier to get into the real estate market to generate wealth than it is to necessarily generate cash flow off the back, or right off the bat, I should say. And why I say that is because typically when you're getting into the real estate market, much like you, I guess a little unlike me, because I went to where the dip was at the time. So for me, it was Florida instead of locally. But for most people, starting out in their local area, if possible. Now, I know it's very impossible for many people in, say, the GTA area. So they'll have to get a little bit more creative. But looking at it from a building wealth perspective over a cash flow perspective, I think is sort of a mindset that you have to at least be open to. Now, that doesn't mean buy cash flow negative. That's not what I'm saying. But what I mean is that in the early goings, until you have enough doors where, the portfolio can kind of sustain those, those unexpected costs, you have to just be, aware of the fact that, hey, if I buy one property and I might go 5 years without a big expense, or it could be 3 months and then the big expense comes. So the cash flow in the early goings is more about helping you to sustain and build that portfolio. And then as you go, much like yourself, it's like now we look much more strategically around cash flow over, let's say, built-in equity. I still am a sucker for built-in equity. Like I love, buying when I feel the property is either undervalued or maybe the market is undervalued, although that's harder to find these days. But ultimately, at the end of the day, it's like this transition to build enough quote unquote wealth that you've kind of created a bit of a foundation for yourself, right? Like in the worst case scenario, You could always pull equity from one of your properties. You could, use that home equity line of credit on one of those Arizona properties if you still have it. Or you could actually sell and be okay, right? So it's like, if I'm going to add more doors to this portfolio, I'm going to want to make sure that it's actually going to improve my cash flow, because as we get into later life, and now you having been retired from, say, your career, it's all about cash flow, right? Having equity is not that helpful when you're trying to survive, right?
100%. And Kyle, you hit the nail on the head. And again, that was my journey. When I started in Vegas, again, what attracted me there was equity. It was not really cash flow. Remember, $500,000 US property down to 150. My logic there was, you know what? I don't care even if I bleed a little bit of cash, because what I'm looking for if that 150 goes back to 500, then all of a sudden I have tripled the investment.
Totally.
Just like that.
100%.
Just like that, right? Just to come back to where it was prior to the crash. And same thing with Calgary. That was the similar logic. Wherein I want a little bit more cash flow now, but Calgary I love because I was buying at a dip. New Brunswick, to your point, as I have built the foundation, I was now focusing on cash flow, and that you summarize it perfectly. The mind shift changed from pure equity play to equity and a little bit of cash flow, and now just purely cash flow. It's what's driving my investments right now. 100%.
Amazing. Amazing. This has been awesome. And I want to pause here for a moment because we're coming near the end of this episode. And I want all of the audience, the listeners, to really reflect here for a second. Okay. 2001, I get it. I get it. That was over 20 years ago. So it's been a journey for you. But when you started, I want everyone to kind of think to themselves, I know some other people who have, immigrated to Canada, who have come with, not a whole lot of money in their pocket. But the reason I love your story so much is the fact that you've essentially committed to it. And I didn't mention it earlier, but you had articulated the sacrifices you had made, not only in the 60-hour work weeks you were doing in order to start on this journey, but you were living quite, we'll say responsibly. Some might call it frugally, but ultimately at the end of the day, you were making sacrifices to your personal lifestyle. So you were essentially stealing cash flow from the present, in order to increase your cash flow in the future. And that's something that for me is a big takeaway that I'm getting from your story here. And I feel that a lot of us as humans, and this isn't a bad thing for those who are listening and maybe feel that I'm talking directly to them. The reality is that it's hard to have your cake and eat it too, meaning you have to decide what is more important for you. And I've been on the phone with many people who are looking into doing this type of journey. And I ask them and I say, listen, it's which one do you actually want more? Do you want more in the future? Or do you want more now? Because you can have more now. You could have had more now when it came to those material things, to your lifestyle choices, but you made a different decision. And I know for those who are successful like yourself, and I would argue that I'm kind of that guy as well. I like to, I don't spend a ton, and I love the challenge of it. I love, working towards that longer term goal. So ultimately, for those who are listening, I think, a big takeaway I'm getting here before I want to flip it to you for, the big takeaway you want for the audience is really getting a handle on what it is that you really want, and just making sure that that you're fully committed to it. I always say to people, hey, I as a former teacher, I used to say, if you want to be an astronaut, you can be an astronaut. But let me tell you something right now, that when you go home today, if you just sit on YouTube watching videos, you don't really want to be an astronaut. You should be working towards becoming an astronaut. So what are you going to need to do? The same as the NHL, baseball, whatever you want to do. And I would argue the same is true when it comes to investing and creating a financially free future for yourself. So I want to flip it to you, my friend. When people think about this episode with Luis, what are you hoping will resonate with them? What Canadian wealth secret sauce do you want them to kind of resonate with them as they leave here today?
So to answer your question, Kyle, I'll summarize it into 3 points. Okay. I love the word frugality. right? Because again, as an immigrant who came here with English not being my first language, I thought being cheap was the same as being frugal. There's a big difference now after being 20 years in Canada. So yes, I love frugality. I continue to shop at Value Village to this day. I continue to go to garage sales. It's because of the thrill of the hunt. I love buying things that I know are underpriced. It's the same mentality as buying assets, right? I love buying cheap clothing, right? So I still buy my clothes to this very day at Value Village. So it's I think point number one is it's not what you make, it's what you save. Okay, that's number one. Number two is I hate to say it, but we both love numbers. Numbers work. Do your research, right? Make your investment decisions on the numbers. Don't be too emotionally attached. Especially in the game of real estate, it's not really how the house looks like. It's how the numbers look like for that particular property, right? So I think that's number two. Number three, seek mentorship, right? To this day, being where I am right now, I do a lot of free mentorship. I talk to so many people I've never met. We just do video calls and I teach them on what is the best practice. I also do joint ventures, right? Wherein some of my friends and some of the people I get introduced to who want to learn to invest in new provinces or new areas. I've started doing that, and we are about to embark on a new journey for 2 or 3 properties in the next few weeks. So mentorship is my last advice. Wherein there are certain things which you can never learn just watching through YouTube channels and all that. It is different when you actually have a conversation with a mentor. And again, I do this for free, and I also am a mentee to people who have been to the journey where I plan to go to next. So
I love it. I love it. And that I love that idea as well. It's a model that both, John and I use with Canadian Wealth Secrets. We offer people to come on to calls with us, and we just want to help them get to the next step in their journey. And it may lead to something like you said. Maybe it leads to a joint venture opportunity for both of you where you get to both win. It's all about the win-win. I love those three. It's not what you make, it's what you save. Not how the house looks, it's how the numbers look. Amazing. And get mentorship. Mentorship is like, hopping into a time machine from where you are now to where you are, or at least closer to that success that you're after. Is like you're able to hit the fast forward button because you have somebody there to help guide you along, to help get those bad, irrational thoughts out of your mind, to ask you the right questions. So I love it. So Luis, where can the Canadian Wealth Seekers find you if they'd like to reach out and learn more about you and what you can do to help them along?
I am very active in LinkedIn, right? So they can just type my name. It's Luis, Luis, Limgenco, LIMGEN.co. I'm very active in LinkedIn. I'm also very active in Facebook. You can be my friend even if you haven't met. Let's have a chat. And I'm sorry, I'm not as advanced as Kyle, where I don't have a website. Because Kyle to me is I consider one of my mentors. I mean, I've talked to Kyle before this interview, and he is a wealth of knowledge. And rest assured, Kyle, I'm sorry to say this, but I will be bugging you every now and then to pick your brain because I have a lot to learn from you. Okay.
I love it. I love it. I so appreciate it, my friend. And listen, it is all about, again, it's always a win-win. I find I always learn something when I'm on a call. I learned something in the calls that we had previously, and I'm sure it's going to be the same for both of us on the future calls. I know we've got lots of, tax strategy. We're talking about estate planning, all kinds of beautiful stuff. And my friends, we will have all of the information on how you can get connected to Luis in the show notes. This episode number, as I'm recording this, I'm actually not sure which episode it's going to be, but it will be on the Canadian Wealth Secrets website, canadianwealthsecrets.com. And of course, friends, if you're looking to hop in for a discovery call, head to canadianwealthsecrets.com/discovery. And my friends, we're wishing you all the best. Luis, thanks for taking the time here today.
Thank you so much, Kyle.
This was awesome. We so appreciate you.
Thank you. Thank you. Have a wonderful day. Thank you.
We'll chat with you soon.
All right. Bye.